For over 2 years, we have been wondering when will everything crash? Well, the last 6 months prove that has started. Raising the rates by 1 or 2% is more than enough to crush the booming stock market. Many companies that doubled their stock prices throughout the pandemic lost all of their gains and are back to the pre-COVID era. Whoever sold before the crash must have profited enormously. But a stock market crash is not a big deal since most of the stocks are owned by the top 10% of Americans. However, when real estate prices crash, everyone suffers since everyone has a roof over their heads. House prices increased by over 10% in 2020 and almost 20% in 2021. We hadn't seen such price hikes since 2005 or 2006, when the housing market was heading into a crisis that would take down with it the entire economy. And since the Fed is raising the rates, house prices are crippling. So the question that many have been asking is, will the 2008 housing crisis repeat itself? Are we headed into a similar crisis? And how bad will the crash be? We will answer all of these questions and many more. But before we do that, give this video a thumbs up and let's dive in. The current crisis is unlike the 2008 housing bubble. The 2008 housing bubble was driven by different factors. Loose banking regulations led to overrated mortgage-backed securities that were issued by rating companies. Junk loans, or the loans that have the highest chance of defaulting, were mixed with good loans and were given AAA ratings. Investors traded these securities based on the narrative that these are stable, great loans that are insured by giant financial institutions such as AIG. But the moment some of these loans began to crack, it was like a domino effect that led to the crash of the market and bankrupted giants like Lehman Brothers or AIG. But the current housing bubble isn't driven by junk loans or fake AAA ratings, which is leading many to believe that the housing market is fine. However, what we also have to take into account that there are no two identical crises. Each bubble or each crisis is different. Once there is a crisis and we take measures to fix it, we'll learn the lessons and try our best not to repeat it, at least in the foreseeable future. That's why ever since the 2008 housing crisis, taking a mortgage has never been as easy as it was before the 2008 crisis. So it will be unwise to imagine that the current crisis will follow the exact steps of the previous crisis. What we have to take a look is why house prices rose so much and what are the chances that they could collapse. If there are such indicators, then a crisis is an option. After the 2008 crash, many home builders went bankrupt since house prices collapsed and building homes was no longer a profitable business. Only the most stable companies survived the crisis. Since the government tightened banking regulations, the demand for houses dropped significantly, which made it even more difficult to sell homes. However, a lot has changed since then. Banks are of course still regulated, but getting a mortgage isn't as difficult as it was right after the crash. The housing market began to grow at an average rate of 1 to 3% at best, since supply of new houses in the United States was at a stable rate. But if you look at the data, more and more developers jumped into the game when they saw that mortgage rates were at a historic low and the demand for houses is at all-time high. Even though the pandemic created such a huge shortage of real estate, starting from 2021, the supply of new homes began to rise to the point where it's almost double the pre-pandemic level. They have begun slashing prices to be able to sell now, since the Fed is literally raising the rates at every opportunity. Higher rates means higher mortgage rates, which means lower demand. Lower demand means it's difficult to sell your house. So it's better to cut prices and sell now before the Fed hikes the rates further and makes it even more difficult to sell. Builders are slashing prices and slowing constructions as buyers pull back, survey shows. Boons for buyers. Here are the top 10 cities where sellers are slashing home prices the most, while real estate is to blame for America's spiking inflation. Up until February or March, we had the absolute opposite happening, where buyers would start a bidding war just to be the one who is going to purchase this or that property. We have seen headlines multiple times where people overpaying 20, 30, or even 50% just to buy a certain property. We were also in this uncertain period where we thought that the world might end. The media was shouting all over the place that we had no idea how long it would take for us to get back to work. People got scared. They were not ready to sell their homes, fearing that they would be left out. But today, fast forward to 2022, when we are facing challenges such as real conflict in the middle of Europe that's endangering the current world order, the media is no longer focused on COVID cases, and people are getting back to their pre-COVID lifestyles and are back to selling their homes. Some people waited 2 years just to sell their homes. Why sell now when tomorrow prices would rise? The last time we had a similar crisis was in the late 1970s, after the Iranian Revolution, when oil cuts sent shockwaves across the globe, raising oil prices. By 1971, inflation reached a startling 11.3%, and in 1980, it soared to 13.5%, and then the economy fell into a recession. To be honest, if we look at the data, things are much worse than they have been back for multiple reasons. First of all, Russia is not Iran. Russia is much bigger and deeply integrated into the world economy. It doesn't just export a lot of oil, it is the largest gas supplier and the largest wheat exporter, and it's invading a country that is also one of the largest wheat exporters in the world. And we did not have a global pandemic where we printed trillions of dollars to make sure everyone stayed at home. The Fed raised the rates first to around 10%, then to 19% by January 1981. Think for a moment how high mortgage rates would be if interest rates were 19%. I think mortgage applications would drop so much that home builders will start going bankrupt again, as they did in 2008 or 2009. People will start slashing prices more just to be able to sell, since the demand will simply vanish. Only those with cash will be able to buy. By the way, only a third of home buyers pay full cash, and more than 65% of home buyers finance their homes with a mortgage. Another reason why the housing market crashed back in 2008 is because when people with bad credit history defaulted on their mortgages, prices began to decline by 10 or 20%. People who actually could afford their mortgages realized their $500,000 mortgage was now worth only $400,000. They also defaulted on their mortgages, since it didn't make sense to keep paying a mortgage that is much more expensive than the actual price of the house. That drove house prices farther down. We're seeing the exact same trend now. House prices rose by almost 20% last year alone, and this year builders are slashing their prices. The number of active listings are going up and mortgage applications are going down because mortgage rates are rising. And if inflation is not going to come down, the Fed will keep raising the rates to crush the demand. On top of that, we'll most likely face a recession, as we have discussed in previous videos, since the world is on the brink of energy and food catastrophe, which will further lower the demand, which will bring prices down. If real estate prices decline by 10 or 15%, what will homeowners who took mortgages in 2021 will do? Will they keep paying their overpriced mortgages? Maybe yes, maybe no. If the answer is no, can the Fed afford to slash interest rates again? It can't even bring down inflation after multiple rate hikes. I don't think they will risk lowering the rates in the coming future. It's a recession that we all have to swallow. I know that the Fed keeps saying that we're not seeing any signs of recession, but the Fed is very careful with its words. What the Fed says matters the most. Remember, back in 2021, we already had the data that inflation was getting out of hand, but the Fed calmed everyone down by saying that there are no signs of inflation. But when it happened, the Fed didn't instantly raise the rates, but warned the market. The market didn't listen, so it warned it again, and it didn't listen again. Then only it acted and hiked the rates. Then they said that the US is not in a recession, and now Jay Powell says that a recession is a possibility. So I wouldn't really trust the Fed, since the job of the Fed is to calm investors down and make sure that the recession is not as painful as it could be. It is really difficult to say for sure what is going to happen, but looking at all of these data now, a housing crash that is in some way similar to the 2008 crisis is a real possibility if things continue the way they are now. But only time will show what is going to happen. Thanks for watching and see you in the next one.